Hello guys, and welcome to the second video where I will be going over how I use my strategy in the Hedge Ninja. And I'm sorry if I sound a bit like I have drunk a lot of whiskey or something, but I have come down with a cold, and it's been a very interesting Christmas. The whole family has been pretty much sick from a week before Christmas, and yeah, it's still going. So yeah, it's been it's been rough. So that's the reason that I haven't been doing this video sooner. And yeah, so I'm glad to be back and, well, strong enough to do something. Well, I hope you guys had a good Christmas and are going in for the New Year's Eve, and the markets may return to normal after the beginning of January, so that would be great. Yeah, so this is how I start the analysis with my charts. I have only done this once because my levels are always gonna be the same. So the levels are never changing. The analysis are done over many years of data. In this case, I have from 1986 to, well, now 2022, and as we can see here, we have a lot of different moves. It's a roadmap of how the euro has moved against the dollar since 1986. And so how can that be? I mean, the euro was launched in 99. So how can this be? Well, the precursor to the euro was the European currency, and so the euro sort of inherited the moves of the European currency that was the precursor of the euro. So the data that we see earlier than 99 are actually the data of the European currency, the ECU. And yeah, so that's the reason why we can see data that are even before the euro was even born. So yeah, that's a good thing to know, that there are more data than we think, and traders and big institutional bankers and such will treat these levels back in the 80s or 70s. If the market would go there today, they would probably use the supply and demand from these areas where they traded back in the 80s and 70s, when they were still doing forex trading, because forex trading are older than we might think, just because we didn't have computers back in the 50s. That doesn't mean that it wasn't still being transactions made in the forex market. So I mean, just food for thought, that the markets are a bit older than you might, or not older, I mean, the candles that we see today may seem like the only way that one can trade, but there were trades done before we had the computers and all wonderful things like mobile phones and such. Anyways, enough of that. So yeah, what I used to do, what I've done is map out, like, from the bottom to the top, and then try and find these little areas where market has shown that that there are areas of interest there. When this line has been, or when this area has been, prices come down to it, we can see some reaction from it. So, and then we just map out the kinds of, and it could be like going for moves that are a bit lower, so we don't have to wait like 500 pips in between. I'm not gonna do the whole thing now because I can't really say that it would be the exact same that I have on my template, but this is just to give you an idea of how I do it. And well, once you have done your chart like this, we can, well, we never have to do it again if we feel that it looks good, and we can see some proof that it actually is valid. And how do we do that? I mean, well, this was just an example of how I do it, and then I just keep doing it until it's done, until I've reached from the bottom to the top, and then we can just see if on data like that I didn't even have when I did it, and we can see that it's still areas where the market has bounced from, even if I didn't even see it when I did it. So there must be something. Anyways, so this is the template that I'm using, and well, monthly chart may seem a bit extreme, and I agree. I'm not looking at the monthly chart when I trade, but this is just to give you an idea of how my levels are from 1986 to today. So if we go down to the weekly chart, we can see more clearly, like more accurately, how the market came into the areas and how it reacted a bit more. So if we look, I mean, we are still in 90s, so now we're in 2000. But yeah, you can see like how what's happening when we reach a level. So the idea is to, when the market hits one of these levels or close to, we can use the Hedge Ninja tool and to create orders around these areas and take profit of either level to level, like this, which would be 300 pips roughly, minus the hedge zone, maybe 280 something, or 315 pips, or well, minus the hedge zone. But I would recommend to have some kind of target in the middle, because if we treat the middle as a profit zone, we can see that there is more likely that that's gonna be hit rather than the full move. If you just try and look for areas where it hit the middle and went back, that my mentor taught me that this area was called the profit zone in the middle, but he also said that it could be good to trade from level to level. That's just I mean, if it is a very strong trend, like in this for example, I'm not saying this is easy to spot, but, or at least not easy to predict if this is gonna keep on going. That's never easy in the middle of the fight. But yeah, it's a good idea to have some kind of minor profit target in the middle. Maybe take half the position off. Maybe stop the tool, the Hedge Ninja tool, and take profit manually, and maybe let it go. I'm not saying there's one way to trade like this. Anyone can create their own sort of system around it, but these lines are, in my view, very strong and very good. I mean, sometimes it gets messy like this, but yeah, if you have some kind of risk management and maybe like some system around that too, that makes I mean, it's very versatile, the Hedge Ninja tool. You can use it in so many ways. You can have positions that if after a certain position, then you go for break even, and yeah, you can. I mean, you don't have to. If you are many positions in and you feel discouraged by it, I mean, there's no shame in taking a loss. I mean, that's what trading is all about: being able to lose without losing courage and fear that the next trade will just be a loser as well. I mean, yeah. So, well, so yeah, this is the way that I use these lines. I mean, there's no telling what will make that the line is breaking, or the line is broken. Sorry. I mean, that's just that may just be a shift in fundamentals. I don't know. We can do our own analysis, like, do we think that a line will hold or not? I trade this system based on the daily time frame, so if we break an area like this one could expect that after such a move that it will go back and retest, but that doesn't always happen. So it isn't a sheet or something. Nothing is certain, and I don't know. It's at least it's a trading system that works most, or not most of the time, but at least enough times that it's worth looking into and trying out if you are interested. This area, or this trade, would have been tricky, but I mean, if you look at it, it's still like 90 points, 90 pips. I mean, sorry, it's 90 pips. I mean, that's at least worth something. I mean, yeah, sure, you would hope for a little more to the middle to sort of reach a target or something, but we can never know exactly how much we will get. And yeah, it's a good idea to have the middle as a target, and sort of treat the market as a or the middle as a profit zone, and whenever more you can get, that's always nice, but we shouldn't really be greedy and always go for 20 times our risk. Yeah, so this is just the euro dollar, and the pound. The pound dollar doesn't look exactly the same. If we look at these levels, by the way, it's very interesting, because when we see like areas that I have found that the areas between these lines are kind of similar. So one could make some kind of pattern that market moves the same kind of ranges between these lines. So the ranges are basically the same, or not exactly the same, but similar. So let's say if this area is 400, this area is 333, so maybe that's not the best example, but then we just a smaller to 240 pips, and this one is 320 pips, and then 340. So it creates about 300 pips in between these zones. So that creates, I mean, a map that is of the 300 pips we have. But then a move like this is usually after some kind of big fundamentals or some kind of shift in fundamentals, like, I don't know, interest rates being greater in one area, or quantitative easing, whatever. These kinds of big news and big fundamentals for the currency. So yeah, so this is basically how I do it. And yeah, then I used my Hedge Ninja to create orders around these levels, and I will show you more about that when I start my challenges in January, and that will be more like sort of vlogging, giving you some kind of weekly to semi-weekly updates. I will give you just like very honest videos of how it's going and how I'm using the Hedge Ninja and this strategy, and I will show you more like other currency pairs as well. And if someone is interested in these kinds of what I've been showing you, it's okay to ask about it, and I will try and help and do my best to answer any of the questions. So yeah, I'm just gonna post this video uncut, so sorry if it's very rough and raw, but I'm trying to do some editing, but I'm just not up for it. Sorry guys. So yeah, this is gonna be a minor lesson in my strategy. I'm not very going into the like in depth about it yet right now, but it's not a very complicated system, so it's not I don't have to write a 400-page book on it. But yeah, so I hope you guys have a great New Year's Eve, and stay safe, and try not to get sick like me. But yeah, living in North Sweden, I mean, it's minus 20 degrees Celsius, so should I move south? Anyways, take care guys, and see you next week. Bye.